What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Today, I'm joined by Paul Woolman, the Managing Director, Global Head of Equity Index Products at CME Group. Paul and I are going to discuss the strategic use of E-mini Russell 2000 futures and options at CME Group to help investors manage Russell Reconstitution-related volatility during the rebalancing period. We'll highlight the advantages of futures, such as liquidity, capital efficiency, and the ability to easily go long or short. We'll also discuss how to strategically use tools like the basis trade at index close, known as the BTIC, and the exchange for physical, known as the EFP, during the Russell Reconstitution. Let's get started. Today's podcast is brought to you by CME Group. Whatever the obstacles, CME Group provides the tools that global market participants need to manage risk and capture opportunities. With 24-hour access to futures, options, cash, and OTC products across all major asset classes, you can drive your trading strategy forward with confidence and precision. CME Group, where risk meets opportunity. Paul, welcome back to the show, my friend.
Thanks, Anthony. Great to be here.
Really excited to hear what CME does during the recon. I mean, so many of our traders out there are trading the Russell 2000 futures and going to be very interested to see what the exchange says about Russell Recon.
Yeah, well, thank you. So, I mean, Russell Recon's always an exciting trading event, highlight of the trading year, I would say. Great to discuss how some of the derivative products we've got available at CME can be useful to trade around the Russell Recon itself. First, just to start, just got the disclaimer on the screen, not giving any investment advice per se today, but again, just going to give some educational points around our product offering. So if we think about just how can clients access Russell 2000 or even Russell 1000, they can do it in a variety of ways. So one is to hold a cash portfolio. That's very common. But when it comes to trading around Russell Recon, that might mean you have to trade in excess of 3,000 stocks if you're trading around the Russell 2000 and the Russell 1000. And from an operational burden perspective, that's a high operational burden. And so what a lot of investors look to do is really try and outsource that problem by trading an index-based product. That means someone else has to do that operational task and you just track the index-based product. And different index-based products are out there. Obviously, futures, very liquid and efficient. We're going to go through some of the advantages of futures, but also you could trade on swap, you could trade an ETF, or as Rick pointed out, you can trade options. But really, if we compare the advantages and disadvantages of all these product wrappers, they all have various pros and cons. It's not that one particular instrument is better than another per se, but what is clear is that when we talk about futures, they've got some key important advantages. And the first one really is liquidity. So huge liquidity in Russell 2000 futures at CME Group. It's really improved since the contract came back to CME several years ago. And the other element of this is you can trade the product around the clock. So you don't just have to trade around US hours, but you can trade it in the overnight hours too. And be able to source liquidity around the clock in this day and age when there's news flow hitting all the time is extremely important for investors. Another important thing about futures is the capital efficiency available. So when you think about it, it's not a fully funded product. So that means you don't have to put all your money into the product up front. Here you have to put down some initial margin and then maintain maintenance margin after that. Another thing is the ability to go short as well as long. So with a future, that's very easy. There's no borrow required. You can operationally just as easily go short as well as long. And so some of these things are really important features around futures. One thing to bear in mind with a future is it does have a fixed maturity. So you will be required to roll it as it nears the end of the maturity of the particular contract that you're in. So these are just some of the things to keep in mind. If we think about the Russell suite, since it's been back at CME, We got the Russell 2000 back in 2017. And as I say, liquidity is going from strength to strength. We've also invested a lot in terms of broadening out the portfolio of products that are available. So we've launched total return futures, most recently adjusted interest rate total return futures, and these products are starting to trade strongly. We've also seen more recently addition of Russell 2000 dividend futures, and they're being traded more actively. And of course, we have functionalities like BTIC and EFPs, which we're going to talk about a little bit more in depth. But a further thing was the introduction of the micro E-mini futures back in 2019. We've just had our 5-year anniversary. These products have been hugely successful in terms of liquidity and really given further access to active retail investors alongside institutional accounts who are looking to fine-tune their positions. So you have the E-mini contract and the micro E-mini contract available side by side. If we think about E-mini Russell 2000 futures and options at CME, we can see that they've performed very strongly. And as I said, one of the key factors is liquidity. So when we look at E-mini Russell 2000 futures, they're trading over 220,000 contracts a day this year. That's over $22.5 billion of notional traded daily. So a huge amount of liquidity available via these futures. On top of that, you have the micro futures. They're trading 87,000 contracts a day. That's almost an extra $1 billion of liquidity there. And that's available in this fine-tuning aspect. We also have options available. These are options on futures, and they're increasingly being used and increasingly popular. Now, when you compare the liquidity available in, say, the E-mini Russell 2000 future, what you see is that it trades over 3 times more than all the most liquid ETFs that track the Russell 2000 combined. So a huge amount of liquidity available in this product set, and that's what our clients love, and that's why they turn to CME in order to invest via an index-based product such as a future.
Yeah, one thing I will say, Paul, I remember when the micros were coming out for the equity indexes, and as an index trader for over 2 decades myself, I was interested to see how the marketplace was going to react with yet another product, right? And it just really fed off of itself, right? I mean, as the micros got more popular, a lot of people came into the space, better product to hedge, specifically hedge and manage risk. And it just, I think it's continuing to grow the actual bigger products as well, which I think is really fascinating because, as CME, I know as I've talked with you guys so much about this, that, you wonder how is it going to help or hurt the other products. And overall, it's lifted all tides. You've seen volumes go up across the board.
No, that's right. And what you see with many of these products is where there's these fears of cannibalization in some way, they don't really exist. What you find is it taps into another investor profile or is additive and complementary along to the original products. In this case, the micros being very complementary to the E-mini sized product. And both institutional clients using it to fine-tune their positions, especially in things like segregated accounts or where they need to trade a smaller hedge for whatever reason. But also, if you think about the active retail trader, lots of retail traders are now expressing their investing positions via futures, able to invest in this smaller, more nimbly sized contract. So yeah, it's been a great success, and 5 years have flown by, but really great to see the success of micro mini futures.
Yeah, specifically during this time when you have a Russell Recon, if you own some IWM and you've got your account up and you have access to futures, you can go in and you could use the micros or the big contracts. So you can really precisely hedge during this time if you feel that you need it, or you could just trade the price action. And I think that, we don't talk enough about how much the micros have really accelerated. I just think the popularity of futures in general, just such a great product.
Yeah, no, completely agree, Anthony. And what's interesting is, of course, when we talk about the Russell 2000 Recon, a lot of people focus on Russell 2000 itself, but there's the Russell 1000 as well. And, the Russell 1000 futures at CME are starting to trade more and more. If we look at the sort of green line on this chart, that represents open interest. So that's positions that clients hold open overnight. And as you can see from this suite, which includes Russell 1000, but also the Russell 1000 value and growth versions of futures, you can see that actually we're at all-time highs in terms of open interest. What's interesting is that out of these three products, the one that is traded the most is actually the Russell 1000 value. So that's where a lot of clients are active and wanting to take positions. And in terms of the trading style, what we've seen over the last few years is that people have started to trade via blocks and BTIC a lot more and not just using the order book. So, great to see this activity. And it, again, is another complement sitting side by side the Russell 2000 activity. So now we're going to talk about the Russell 2000 Recon itself and really how futures and some of the functionalities that we have available at CME can help investors navigate the reconstitution. And two primary ones are BTIC and what we call exchange for physical, or EFP. And BTIC stands for Basis Trade Index Close. And what it is a way to trade a future against the cash index close. So when you're at the top of the show, when I was speaking about potentially looking to outsource your index rebalancing operational needs by using an index-based product, here you can use either of these two functionalities to switch into a future, and at a later stage maybe flip back to a cash basket should you wish to. But what BTIC does is allow you to trade a basis intraday. So you agree to a basis intraday, and then that basis gets added to the cash index official closing price later in the day, and that's what you'll buy or sell a future at. So in this example, we have trader A trading against trader B. Trader A is buying, and they're going to use this functionality, BTIC, Basis Trade Index Close, in order to buy 500 contracts of the E-mini Russell 2000 index. They agree this intraday, and at the time that they agree the trade, the basis or the BTIC price is plus 90 cents, 0.90. Then later in the day, once the index price is known, and let's say it closed at 2,108, and this is the cash index price, not the futures price, the cash index price of 2108 is realized and is the official index close, which is released by FTSE Russell. Then at that point, the basis that was agreed through this BTIC transaction is added onto that print. And so that would result in a futures price of 2,108.90. And that is where trader A would buy 500 contracts of the E-mini Russell 2000, and that's where trader B would sell it. Now, this is a useful functionality because a lot of clients want to rebalance around the close or adjust their positions going into, say, the reconstitution when they want to outsource their position by trading something else against this on the close. And so this is a really useful functionality. Other clients who are trading, say, the additions or deletions from the index are often doing that against a market neutral position. Again, they could use futures for that, and using BTIC can allow them to move in and out of those futures positions as their hedge to their addition deletion basket. So really useful functionalities for clients, and hopefully something that we'll continue to see clients take advantage of. Just for background, the volume being used by BTIC this year on Russell 2000 is up something like 20% over 2023. Now, a second functionality that is very popular with clients is an exchange for physical, or EFP for short. And in this example, really, we look at the starting position of both a dealer and an investor. And what this allows clients to do is really flip a position from one index wrapper or one position into another. So in this case, let's assume the investor is long $295 million of the index via a cash basket. So they're long all the relevant constituents of the Russell 2000 in the right proportions to replicate the index. However, they choose not to want to go through the recon and have to do all the trading that we've described. They want to outsource that problem by buying an index-based product. How could they do that? Well, through an EFP, they can negotiate this with a dealer. And in this case, let's assume that they agree that the fair basis of the future to that cash basket is plus 70 cents, 0.70. And in this case, the client would buy an equivalent number of futures to that $295 million of valuation let's say that's at current prices of the future at 2108, that's 2,800 contracts. So the index level price is effectively 2107 spot 3. That plus 70 cents takes us to a futures price of 2108. So the client chooses to sell their cash basket to the dealer. The dealer chooses to sell a future to the investor. As this is reported to the CME system as an EFP going through, essentially the investor divulges their cash basket, and the broker in response takes that cash basket on. At the same time, simultaneously, the dealer sells 2,800 futures to the investor, who becomes long of those futures. And in terms of the final positions of each participant to this EFP, the investor has replaced their cash basket and is now just long 2,800 futures, which is notionally equivalent of their cash basket, but now they hold it via futures. On the dealer side, their position on their balance sheet is that they are long the cash basket, which they bought off the investor, and they are short the futures. Notionally, they're flat, right? In terms of that market exposure, they're flat, but really they have a balance sheet position of long cash, short futures. And this EFP is very, very commonly used. A lot of investors use it to switch in and out of futures and migrate between, say, cash baskets or ETFs into futures and vice versa. So something that's really popular and great tool to use going into Russell Recon.
Paul, thank you so much for explaining the EFP. This is something I had not been too familiar with. I've been talking with you guys a lot about BTIC in the past, but this EFP is very interesting. And yet another way that the exchanges put together a product to help a seamless transition during Russell Recon. Like you mentioned, I could see how this is used during this time and obviously beyond this time as well. So Paul, thank you again so much for joining me. It's always a pleasure to have you back on Futures Radio Show for Russell Recon. Thank you so much for your time.
Thanks, Anthony. Thanks, everyone.